This is the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Any postings and or social media content are the views of the advisor and do not necessarily reflect BMO's position or viewpoint. The information herein is for Canadian residents only and does not constitute any financial, legal, tax, investment, or other advice. The Wealth Roundup for the week of January 28th, 2026. I'm Terry Evans, along with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Don't need binoculars to see the end of January now, and even still looking down the road to spring, Patrick. Is there optimism in the markets as we get close?
So I'll have to admit, I've really liked these longer days of sunlight, and I think kind of last week kind of felt like a long week of just news coming out of Davos. I was kind of looking forward to last week, just kind of wrapping up and all these politicians going home. But yeah, you'd think with all of the geopolitics going on is that there would have been some nervousness kind of percolating through the markets, and maybe indirectly it has, because gold, of course, has continued this incredible march, reaching 5,000 and now exceeding 5,000 today at almost 5,100. I didn't see this coming, Terry. I honestly didn't see this coming. But it's a story. And now silver, which is not something I really tend to follow that much, but silver has kind of joined the party. But it hasn't taken away from the broad-based equity markets. The S&P 500, since our last podcast, up about 2.5%. The TSX, flat. So, flat's not terrible. Very little unchanged. Bitcoin, looks like it's kind of retracing some of its negative steps down today, down about 2% over the past week. But you'll recall when we kind of talked about kind of the wild card forecasts for 2026, we talked about oil. And oil has been kind of slowly creeping up. So WTI today up around $62. Western Canadian Select is sitting at 48.28. So we're still kind of sitting at that same kind of differential. The differential has remained about the same.
What about the dollar? Has the dollar gone up at the same? I know it's gaining in strength, and it's not as good as gold. It's too bad it wasn't, but it's doing better than it has been historically, huh?
Yeah, so going into 2026, we had expected that the US dollar would decline versus a basket of other global currencies, probably somewhere in the 2 to 3% range, which seems very insignificant. And that would largely happen because, the forecast is for U.S. interest rates to come down a little bit this year. 1, 2, I've seen as high as maybe 3 cuts this year. So we'll see. So it would make sense that the U.S. dollar would just kind of weaken because they're lowering their rates. They're bringing U.S. rates more towards a neutral stance. But there's more at work here, is that last week represented the best 1 week rally that the loonie has seen in over a year. So a couple things is that, the loonie could be maybe getting ahead of this, rate decision in the US. The loonie could be doing well because oil prices have firmed up. Traditionally, that makes a lot of sense. But it's probably a whole bunch of things all contributing to the loonie's strength, including the outlook for growth in Canada. And so part of that could be because we're coming off of, very low growth, but this anticipation that Canada is changing it up, diversifying its trade partners, and perhaps more open to foreign investment. And all of these things are strengthening the loonie. I have seen some forecasts that would suggest we might see the loonie even start to approach that magical 80-cent mark. We'll have to wait and see.
Wow. Holy smokes, 80 cents.
80. Yeah.
Remember when the Canadian dollar for a short period of time there was worth more than the American dollar?
It's funny you say it because I was born in 1971, and just kind of looking at the charts is that in around the early 70s, that was another time that the, Canadian dollar was trading at a value higher than the US dollar. And so, of course, during the great financial crisis, the Canadian dollar again, as the Canadian economy held up significantly better than the US economy. It's certainly US real estate, US financial stocks, and then most of Europe. So, I can certainly recall a lot of Canadians going down and using that dollar to buy up U.S. vacation homes. Everybody kind of probably knows somebody who went out and did that investment. Of course, they ended up looking like their own Oracle of Omaha with a kind of a great decision. And then, of course, the loonie does what it does and it kind of pulls back. Realistically, I think the right price for the Canadian dollar versus the US dollar is around 76 to 78 cents. That to me seems like the right price. If everything else was equal and the Canadian economy was growing at its 1.5% and the US economy was growing at 1.5 to 2%, the US is the reserve currency of the world. It should be higher. The loonie should be kind of a step back from that. So 80 seems too high. 73 seems too low. The Goldilocks for me is somewhere in between.
What about the economic calendar now? Are we expecting another Bank of Canada decision here in the next little bit?
Yeah, tomorrow. So we're not expecting any news. Oh, sorry, I shouldn't say it. We're not expecting any cut, but we get both a Fed and a Bank of Canada announcement this week. We're not expecting a cut from either or. But as we've talked about in the podcast before, it's not so much the rate decision, it's all of the commentary that surrounds the rate decision. It's the setting expectations for what could happen with future rate decisions. And so, we expect both the Fed chairman and the bank governor to kind of come out and say, we're going to watch the data. We're going to look at inflation. We're going to look at things like jobs and growth. Then we're either going to see kind of this tendency. They either kind of talk about being dovish or hawkish, whether or not they are likely to cut rates or to kind of leave rates the same. Now, there's other things in the calendar, though. So we're kind of about the midpoint of fourth quarter earnings. And so starting tomorrow, we start to get some of the big heavyweights. We get Microsoft and Apple tomorrow. And then that's going to kind of roll into next week with more of the Mag 7. We don't get NVIDIA until later in February. But, that we have a lot of market cap going to be telling us, how they did in the fourth quarter and then giving us some forward-looking earnings. So far, earnings have been good. We also get consumer confidence report, which I like to take a look at sometime this morning. So this is a pretty active week on the economic calendar.
You mentioned dovish or hawkish. Is that the Canadian less aggressive version of bullish and bearish?
Well,
I've
it's
never heard that before.
yeah. Well, they tend to save it when they're talking about rates. Whereas bullish and bearish, we tend to use that when we're talking about the stock market.
They say that the two best days of a boat owner is the day he buys the boat and the day he sells the boat. Is that the same for people who buy and sell stocks or, buy and sell investments? When is a good time to buy? And maybe more importantly, when is a good time to sell your investments?
I'm glad you asked because you're right. I think the buy decision, when it comes to investments, it's easier, and it's obviously it's a byproduct of saving for the future. As that if we're saving for the future, we're putting away maybe savings for retirement, or we're saving for that boat, or saving for that house. Is that we're putting money to work, we're putting capital to work. I think there can, hopefully there's this kind of optimism that the decision you've made to buy an investment per se, you're excited about the growth opportunity of that investment. But I think what's more difficult is the sell decision. The sell decision, if we think about, where a person could be when they're deciding to make that sell, hopefully they're looking at their investment return and they've said, I've made some money. My investment has paid off. But if I sell it, am I going to miss out? We kind of talked about in our, where we're connecting this to is the fear of missing out trade that we talked about in our last podcast, this behavioral finance. So I've made money. If I sell right now, what am I going to miss out on? I would hate to sell it too early. On the flip side, what if your investment has declined in value? And so you're looking at a loss. And so if I sell now, I'm turning a paper loss into a real loss. And so you could kind of see how in both cases, the sell decision could be a lot more difficult than the buy decision. So, I look at this through a couple different lenses. And so, depending on, what type of an investor you are or what type of portfolio manager you are, is that you may take the approach where, say, you're looking at this from a technical perspective. So I always think of the best way for me to describe a technical investment person is someone who looks at the charts. They've kind of got all their charts out and they're looking at what a stock has done. And what they're doing is they're trying to take all of the emotion out of the decision. They want to have a real disciplined approach to all of their buying and selling. And so they might look at something like the 200-day moving average of a stock. So tracking that stock, what it has done historically every single day, and then breaking it out into a chart. And a really kind of good example of this would be looking at the 200-day moving average of a stock or an asset. And if that stock were to close at a price below that 200-day moving average, that would be your sell signal, as an example. So very disciplined. You just follow the charts. Doesn't matter maybe what's happening, with the company itself or maybe the commodity itself, is that you just look at that price. Whereas a qualitative manager, and I like to think that the way that I invest on behalf of my clients has more to do with the quality of an underlying investment. So I'm looking at the thesis. So I have a reason for believing that either this business represented by a stock, or perhaps an exchange traded fund or a mutual fund that invests in, say, Canadian stocks or US stocks or international stocks, is that there is a fundamental reason why this underlying investment should increase in value. And so where that would change for a qualitative manager would be that thesis has started to decay. So the reason for buying no longer exists. And that's difficult to do because, and I would say it's easier going back and looking historically. So you take a look at something like the Kodak film company or the, Kodak camera business, is that, over time, the business became digital. But that didn't happen. That didn't happen in a day. That happened over, multiple decades. But, clearly the business changed. The thesis for owning Kodak stock changed. So, Kodak used to be a fantastic business and it was a fantastic stock to own, but then it wasn't. And so we would look at the same thing with, we were talking about the Mag 7 stocks, is that we would consider Mag 7 stocks very much growth stocks. And these are businesses that are really growing their earnings at a very high rate. On the flip side to that, we'd look at maybe value stocks, and value stocks are more kind of traditional businesses. They're not growing their earnings quite as much. They probably have a dividend, maybe a healthy dividend, and the price that you're paying for that stock, or the price that you're paying for that dollar's worth of earnings, looks cheaper. So you look like you're getting more value, and so we do see this trade-off often happen between people being excited about growth stocks, which are often doing really well, while the economy is doing well and while the economic conditions are doing really well. But investors, over time will say, what, that's starting to look expensive. The story is starting to decay. Now, with my decision to sell, I might go and pivot into more value within the market where I'm paying a more reasonable price. And I'll be quite happy if I just collect a healthy dividend and have maybe some modest growth. And so that would be, another reason why a person might want to sell. I think the last one would be and we've kind of talked about the value of having a financial plan and articulating, what type of asset mix, mixture between cash, fixed income, and equities is kind of the preferred asset mix for an individual investor based on their preferences. And once that portfolio becomes perhaps out of balance because an investor is drawing down on their cash or taking income from their portfolio and has maybe depleted that portion of the portfolio, and now the equity side is looking a little rich, maybe top heavy, or we've had a lot of growth in equities, and so now the equity portion of the barbell has become inflated, is that a good time to sell would be when you want to rebalance that portfolio back to your preferred asset mix. And that would be another way to both take a qualitative view, what's my utility for this money, but also a little bit like a technical perspective. My portfolio is out of balance. I want to bring it back within balance. Trim some winners and kind of replenish your cash and fixed income.
You mentioned earlier in the podcast the Oracle of Omaha, and I always remember the quote from Warren Buffett. How did he get so wealthy? He sold too soon. I don't know if that's a necessarily the right investment strategy, but hey,
But
it's something to consider. That's for sure.
he's got lots of good ones. The two rules. Rule number one: don't lose money. Rule number two: don't forget rule number one. Right. So yeah, he's
Yeah.
got lots of classics.
Yeah. For wealth management and to start your investment journey, you can find Patrick's contact info at www.patrickmleonard.com. And there you go. That wraps up the Wealth Roundup for the week of January 28th, 2026. Thanks very much, Patrick. Have a terrific day.
You too, Terry.
This has been the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. I'm Terry Evans. The Wealth Roundup is part of the Reluctantly Podcast Network.